All right, let's go. Wednesday, April 10th. What do I want to talk about? I'll tell you what I want to talk about. I want to talk about the fact that I was ahead of everybody. I was ahead of everybody on calling that stock market correction and saying buy into it in November, December. I was ahead of everybody saying you got to buy oil when it was down at 42 bucks. And more importantly, what I'd like to take credit for as an economist was being very, very confident in the fact that first quarter economic growth was going to be solid. And by solid, I meant easily 2% or better. If you recall, and I've mentioned this a number of times, the original forecast, going back to February, if you're looking at the Atlanta Fed, they have that GDP Now forecast, which they update almost every day or every couple of days. That originally had a 0.2% forecast for first quarter GDP growth. And now they have revised that up, actually a number of times. It is now at 2.3%. 2.3%. So virtually equal to where we were in the fourth quarter of 2018. Now, I said that all along. I have been saying all along that, number one, the information that I look at is not information that everybody else looks at. It's not information that's generated from the economy. It is information that literally create the conditions of the economy. That's number one. Number two, my understanding, in other words, through the perspective of MMT, gives me a far, far greater advantage over everybody else. And number three, my trading experience. And as I've mentioned so many times, I mean, there are other MMT people out there. Some of them are famous. You may know some of them. They are academics, primarily. I am the only one who brings to the table the combination of the MMT understanding and the trading background, having been a member of 4 exchanges, a floor trader, trading for a major hedge fund and an international bank. I'm doing this for a long time, all right? Now, I got to get a laugh and, give myself a little pat on the back because today Goldman Sachs, yes, the great Goldman Sachs said, hey, we are revising our first quarter probability estimate for we're revising our recession outlook. We no longer think there is a 20%. I was saying all along there's not going to be a recession. They're taking it down. They said we no longer think it's going to be 20%. We think it's down to 10%, which I guess for Goldman Sachs, that's virtually for them like saying we don't think there's going to be a recession, but they always leave a little bit just to say, we did warn you. But no, I actually have a subscriber, a guy with a very big, major Wall Street firm who was telling me, Mike, I get from you so much better information than Goldman Sachs, and Goldman Sachs is charging their clients millions of dollars. I said, I better raise my prices, even at $250. This was a big, big guy, money manager at a major Wall Street house, telling me that today. I laughed, but inside I thought, you know what? I think my prices got to go up. But you're lucky because right now I'm going to keep them at $250 per month. Now, there were people who got in with me at the beginning paying peanuts. Then I had my first increase. Those people are still paying peanuts. And the next increase, and the next increase, and the next increase. They're all still paying peanuts. And if you signed up at $250, all right, and if you feel that the big picture, and I've had this conversation, I've had this discussion, I've pondered this so many times. I've had people telling me, Mike, I don't have any way to apply your information. That is like, I'm telling you what the major macro big picture, I'm telling you what is going to happen. If you come back to me and say, gee, I have no use for this information, then essentially what you are saying is, hey, Mike, I feel more comfortable being in the dark. Or something, Mike, I like what you do, but I feel better just taking guesses. Or I feel better doing what everybody else is doing, because you know what? If that screws up, at least I could say, hey, everybody else was doing the same thing. All right, let me get off my soapbox for a second. So, stock market up marginally today. I want to talk a little bit about oil. We had the EIA report. I sent out my weekly analysis of the EIA report. Interesting report, actually. We saw another big increase in crude oil inventories, which brought the level of inventories right now up to a 17-month high. At the same time, we saw another big drawdown. I think this was the 11th consecutive drawdown, if I'm not mistaken, or yeah, it might be the 11th consecutive drawdown in gasoline, bringing that down to the lowest level, I forget, but in many months. So very tight gasoline inventories, crude oil inventories high. Crude oil imports now still running around 23-year lows. All right, so and here's the thing. I mean, there's a key factor in here which I think is very, very important. Refiner inputs. That's the crude oil inputs that the refiners put into their refineries. All right, the amount of crude oil demand that the refineries have. That has been running below 17 million barrels a day for 11 weeks now. Now eventually that's going to pop back up. Most of this, if not all of this, is due to refinery maintenance that has been going on. It's seasonal. And this season, for some reason, according to the EIA, it's been taking longer than normal. There's been a lot more maintenance that had to be done. Once we get back up over that 17 million barrel a day mark, my prediction is you're going to see inventories, crude inventories, start to drop really fast. So I would say today's report was neutral, but the longer term picture, medium to longer term picture, still looks bullish to me, because we'll get back up there at that run rate, you know, 17 million plus barrels per day of refinery inputs, and you're going to start to see those oil inventories come down, and that's when all the zombies are going to jump in there. The zombies are in to a certain degree, but they're not in to the level that we have seen them in the past. Like if you go back and if you look at May of last year, or if you go back a little bit further to January of last year, the zombies were so long the oil market. That's not the case right now. They're long, but they're not crazy long the oil market. What else? Gold up today. Fed, we had the FOMC minutes. Again, in there, it was pretty clear they're not going to raise interest rates. However, I have to say this, gasoline prices now at the highest level. I mentioned this yesterday. Gasoline futures at the highest level since October. Very sharp and, I guess, getting more acute is the backwardation. That means spot prices trading over the deferred in the gasoline futures market. Tightness in that market. And remember Powell, who I said will go down as the worst Fed chairman since Paul Volcker. Powell said, hey, low oil prices are keeping inflation down. What was he looking at? I mean, in some places, in California, in some places, gas prices at the pump well above $4 a gallon. So we'll see what happens with that inflation outlook, Jerry. So that's it. Folks, you're not going to get better information than this. I had a big guy at a major Wall Street house say, Mike, I'm getting from you what people are paying millions for to Goldman Sachs. Millions! I got to raise my prices. Maybe not $1 million right away, but even $250 seems a little low. All right, everybody. That's it for today. See you tomorrow. Bye-bye.